Hey, what is going on, guys? My name is Nick, and in today's video, we're talking about none other than the Canadian bank stocks after they've just reported their Q4 2021 earnings. Ever since the beginning of the pandemic, the banks have been through quite a wild ride, to say the least. From the BMO Equal Weight Canadian Banks ETF with ticker symbol ZEB, we can see that the top 6 banks dropped 34% on average within a single month back in March of 2020. Then over the following year and a half, the big banks rebounded from the lows by over 90% on average where they're sitting today. And recently, the governing body for the Canadian banks, which is OSFI, just decided to lift their restriction on Canadian banks raising dividends, allowing them to begin rewarding investors again. So this begs the question, with Canadian banks trading at all-time highs while being able to raise their dividends again, are Canadian banks a buy for 2022 and beyond? Well, in this video, I'll be going through my favorite Canadian banks' recent Q4 earnings report and then discussing whether or not I would plan on buying the bank stocks right now. So if you do enjoy, make sure to drop a like on the video as it does really help out my channel. And don't forget to subscribe if you haven't already. Also, if you weren't aware, I just launched my very own Discord community of investors where you'll get access to all of my stock trades, weekly group coaching calls, my stock intrinsic value calculator, stock research reports, a Discord community of investors, and much more. In fact, the first 25 people who join the student tier will also get access to the weekly group coaching calls with me for only $12.50 per month. It's honestly a screaming deal, so make sure you don't miss out. Anyways, to sign up, just click the link in the description or the pinned comment below. And with that said, let's get right into the video. All right, so my favorite big bank up here in Canada is of course TD, or Toronto Dominion Bank, with ticker symbol TD.TO on the Toronto Exchange, or in the US, you can also trade it with TD. Now let's start out by reviewing TD's recent Q4 earnings report that just came out on December 2nd. So TD reported adjusted net income of $3.87 billion, up 30% year over year, and adjusted diluted EPS of $2.09, which was up 31% year over year. And a big reason the net income was able to rise so substantially was because TD's provisions for credit losses, or PCLs, actually reduced by $123 million in the quarter as the economic recovery continued into Q4. Basically, the banks had to account for potential losses within their portfolios, such as people or companies going bankrupt, but then since they overestimated these losses, they're able to claim the remaining amount back in terms of PCLs as net income. Then moving on to adjusted revenue, which is far less important than earnings to a bank, it was up 5% year over year. As for the entire fiscal year of 2021, TD reported adjusted net income of $14.6 billion, up 47% year over year, and adjusted EPS of $7.91, up 48% year over year. Overall, it's easy to see why the bank stocks have recovered so far and so quickly from the earlier pandemic lows, as their earnings have also rebounded very quickly. And as we all know, stock prices always follow earnings over the long run. In addition, TD was able to increase its Common Equity Tier 1 or CET1 ratio from 13.1% last year to 15.2% in the most recent quarter, which is great to see. Now, if you weren't already aware, the CET1 ratio essentially just represents a bank's financial stability. And it's a Basel III requirement for all banks to maintain a certain amount of equity relative to their assets, such as outstanding loans. And in TD's case, they have a 15.2% equity compared to their outstanding assets, which is industry leading, as the Canadian banks are only required to have a CET1 ratio of 10.5%. Finally, TD reported a liquidity coverage ratio, or LCR, of 126%, meaning they completely cover all of their net cash flows over a 30-day stress test period and are extremely financially stable. There's absolutely no question that TD Bank is very financially stable and they're doing extremely well in terms of earnings and revenue growth. But is right now the best time to be buying bank stocks, and specifically TD stock in particular? Well, now I'll be going over 3 reasons why I think that right now could be a great time to buy bank stocks. All right, so the first reason to buy Canadian bank stocks right now is because they act as hedges against inflation. Recently, the CPI inflation data came out for October of 2021, and it was not pretty at all. We saw a whopping 6.2% average increase in the price of goods and services over the last year, which is the highest level in over 30 years. So investing in companies that can rise along with inflation during these times is absolutely critical. Otherwise, this inflation will end up eating into our returns and eating away our cash. Luckily, bank stocks prove to be great hedges against inflation, and here's why. And to understand this, we first need to know how a bank actually makes money. So banks earn two different types of income, which are known as interest income and non-interest income. Typically, the interest income is the larger of the two types of income for a bank, which is generated by providing loans to customers and receiving interest payments in return. And the way the banks can actually generate income through lending is through the net interest margin that they actually have on each of their loans. And since we know that the Fed increases interest rates during times of inflation to cool down the economy, this actually benefits banks because their net interest margins also rise with these rising interest rates. So the spread between the amount of interest that banks pay on savings accounts and then the amount that they generate from their loans actually increases during times of inflation. So with the huge amount of inflation that we've been seeing lately, it's inevitable that the Fed is going to raise interest rates at some point, and this will in turn benefit the banks over the following years. All right, now the second reason to buy Canadian bank stocks right now is because they just announced massive dividend and share repurchase increases. In their Q4 earnings report, TD just announced a quarterly dividend of 89 cents per share, up from 79 cents per share in the same quarter last year, representing annual dividend growth of 13%. And as seen from their dividend history, this increase is actually above their average annual dividend growth rate of 11%, showing that the company is stronger than it has ever been financially. And based on the current share price of about $95, the dividend yield is sitting at a current 3.75%, with a payout ratio of only 43% based on the most recent quarterly earnings. In my opinion, this checks all of the boxes for a dividend stock. First of all, you have that payout ratio below 50%, a yield of about 4%, and then the growth rate above 10%, being in the double digits. And all of these really check my boxes because TD is such a reliable dividend payer. So for this reason alone, I think that TD is an excellent buy because they will be continuing to increase those dividends. However, aside from dividends, TD also rewards its shareholders in other ways, such as through share repurchases. In Q4, TD announced they plan on repurchasing up to 50 million common shares, which at the current market price represents about 4.75 billion Canadian dollars of shares on the open market. In total, this is about 2.75% of their float or their outstanding shares. So if they were to repurchase all of these shares at the current share price over the next year, this would actually increase their EPS by the equivalent amount. So overall, I absolutely love the fact that TD is rewarding shareholders through both dividend increases as well as the share repurchase plan increases, and not to mention all of the stock price appreciation over the past few years. In fact, we can also see from their recent annual report that TD has proven shareholder returns of 12.4% over a 5-year compounded annual growth rate, which is great to see and reinforces my opinion on buying TD right now. Finally, the third and last reason to buy Canadian bank stocks right now is because their valuations are relatively cheap compared to the rest of the market. So for the full year of 2021, TD produced EPS of $7.91, which increased 48% annually, but the share price also increased dramatically. So if we calculate the trailing PE ratio for fiscal 2021, TD is trading at 12 times earnings right now. And according to Morningstar's data, this is about where TD has been trading over the past 5 years, being a 12.2 trailing PE ratio. So using this information, let's try to calculate the intrinsic value for TD Bank over the next 5 years to see if it's worth the investment. All right, guys, so this is my intrinsic value calculator that I built in Excel, and we're going to be analyzing TD Bank based on the numbers on the Toronto Stock Exchange, so here in Canadian dollars. And by the way, if you do want to gain full access to this intrinsic value calculator, you can join my community of investors within the link below. All right, so the first thing that we need to populate here is next year's EPS growth rate, which is expected to be -1% according to Yahoo Finance's analysis tab. And this is most likely due to the earnings increasing so drastically over the current year, being like 43.8%. Then we need to populate the EPS growth rate over the next 5 years, and that is expected to be 17.55% according to Yahoo Finance analysts. And then for the years of growth, I've assumed 6 years because we have next year's growth rate and then 5 years on top of that. So the spreadsheet automatically populated the EPS over the trailing 12 months, which was $7.72. But if you do want the adjusted figure, because that's just the reported diluted earnings per share, but if you want the adjusted diluted earnings per share, you can type in $7.91, so 7.91, and then that would apply the growth rates over the next 5 years based on these growth rates we entered up here. Now, we also know that the current share price is $95 for TD. This was also pre-populated. And then the trailing PE is 12 based on the trailing 12 months earnings per share. Now, I've assumed that in 2027, the PE ratio is still going to remain at about 12 because over the past 5 years, it has been the same at 12, and I would expect them to continue growing at about the same rate into the future. So based on the 2027 EPS of $17.58, this would give us a 2027 share price of $211. So all in all, the total expected return over these 6 years would be 122%, or in annualized terms, that would be 14.2% annually. And this figure, of course, includes dividends, includes share repurchases, and includes share price appreciation, so this would be the total annual return. And honestly, for a bank stock, I think this is a really good annual return. They're typically slow growers, but they're very, very safe investments that you can just buy and hold forever. So I think this is really solid, and I think TD moving forward will be a great investment. Overall, I've always been a huge fan of the Canadian banks, and even though their stock prices have run up significantly over the past year, their earnings have followed, and I think they're going to be great hedges against inflation over the following years. Now, personally, although I absolutely love these banks, I am not that conservative of an investor, so I might only put a small amount into TD right now because the expected returns are a little bit lower than I could expect in some other stocks. I tend to gravitate to higher growth stocks in general, but I do believe in diversification, and I think TD would be a core holding within any portfolio. So for those of you that might be more conservative investors, TD is a great stock to look into, and I'm sure it'll do very well over the next 5 to 10 years. Anyways, if you did enjoy this video and you really want more videos made on Canadian stocks, make sure to drop a like on this video and let me know down in the comments below. Also, don't forget to check out my brand new community of investors within the link below if you do want to take advantage of that free weekly group coaching call offer for the student tier. But anyways, with that said, I will see you guys in the next one.